The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the Trick or Treat Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to, and I just past 1 o'clock in the afternoon. I want you to know that I'm grateful for your presence here. More importantly, though, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. That's the easy way to reach us. If you can't dial in, you can always let your fingers do the walking, and you do that by sending me an email, steve@tfnn.com. Inside that subject heading, just put radio show question, and of course, well, inside our Tiger's Den, just about any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 24 points, 23,373 is the number. S&P's up 4, NASDAQ 100 up 20, about 0.3% to the upside. Russell 2000 is up 11, about 10 points. Semis are up 11 points. So the Russell and the semis are the big movers percentage-wise to the upside. You've got the transports off just a bit. They're flat. Spot volatility index down 2.5% off 26 pennies. Gold's back $8. Silver's down 17 pennies. We're certainly going to look at those. You've got the Bitcoin Investment Trust up 95 buckaroonies or 13%. Priceline up $24, a little over 1%. Trex Company up $21 or 25%. Rockwell Automation up $16. So some pretty big movers. To the upside, to the downside, it is Shopify down $11 or 10%. Credit Acceptance Corp, second day in a row on our top 10 list here, off $8 or 3%. Alexian Pharmaceuticals down 8. San Filippo, I don't know, John something or other, that's down 10%. So we have things to look at. Of course, I want to look at what you want to look at, especially today, because I won't be here for a good solid week. Maybe not till next Thursday would be the likely date that I will be back with you. But at this stage of the game, I don't have any. I've got a couple questions from the den. I did have one question that came in earlier, which was, where's Apple going ahead of earnings? So if we take a look at the daily chart here for Apple, what you are going to see, let me just kind of explode this up a bit. Excuse me. Here's what we know about Apple. Swing point that we are initially looking at is September the 1st, 2017. 16.5 million shares traded that day. Yesterday was a move above that swing point with accelerated volume, 44.7 million shares. Therefore, Apple has an A to B equals CD to the upside. The small one that you and I would take a look at, and this is where Apple is likely headed as it goes into earnings. A small A to B equals CD is going to give you a price projection of 171.69. You're at 168.65. So you're only talking about $3 more to the upside. That's the first price projection. There's no reason that Apple can't trade all the way up to 177.82. But if you're asking me, where's Apple going as we speak right now, it's the 171.69 level. That's your A to B equals CD point. Where it goes beyond that, I don't know. We don't have any TAS profiles. Not in this chart. I'll go ahead and put the daily and the weekly. I don't think we are below anything. Now, we're above the weekly. We're above the daily. There's no new box out here. You've just taken out a swing point with accelerated volume. It's too early in the week for me to switch this to a weekly chart. It's not too early, but we're just not going to have the type of information that we will need. So I think Apple reports after the bell on the 2nd. That would be today is Tuesday, so that's going to be Thursday afternoon. Anticipate that Apple's going to get up to that 170, 169 before that occurs out there. Should there be no profiles that form inside of Apple, then what you're looking for is the level of support would be about 163.18, 163 to 159. That would be your level of support. With regard to resistance, you don't really have anything out here. Also, I guess since I put up the weekly chart, you had 126 million shares the week of August 28th out there, and you're already at 64. And it's only early Tuesday. So you've got Apple taking out a swing point on a daily. Well, you did it yesterday on a daily basis. Looks like on a weekly basis, you are also going to do that. The larger A to B equals CD. 420 million on April 27th. Did we pass that with volume? It doesn't matter whether we did or we didn't. Just looking for some type of confirmation. We did not, but needless to say, prices run well above that point, so we won't use that as a data point. So that's what's going on inside of Apple. Had a request to go take a look at the ticker symbol here, which I guess is for the S&P Biotech. I don't guess. I know that it is because that's the information that was posted inside of the den. So it's X. Where is it? Where did it go? Where did it go? XBI. Whoops, not XBU. XBI as the S&P biotech sector, and this individual is short that sector via LABD, one of the direction share ETFs. So let's take a look at what it is that we can figure out about the XBI. Let's get rid of that A to B equals CD to the upside. So there's, excuse me, sorry about that, sneeze, there might be a couple of those. So in the case of XBI, on a daily basis, here's what you know, Cam. There's a brand new profile that formed yesterday, and that profile structure is bullish. So this suggests to you and I that XBI may want to bounce up to 86.27. If this has turned to the downside, so that means your LABD trade could get some pressure out here. That's based on these market profiles. So one thing at a time. So 86.27 is going to be your kind of your go, no-go zone. If price closes above that, then XBI should run all the way back up to its highs. That's what that daily chart is communicating to you and I. 86.27. If we take a look at Stevie's red line, it's 85.26 is the number. So we had 85.26, 86.27. This would definitely say to you, if you were to see a close above that, so now we're going to just revert back here into the market profiles. If you see a move above 86.27, don't stay short. Well, stay short if you want, but anticipate that XBI is going back up to its swing point highs. To the downside, you're short this. What are you looking for? You are looking for price to get below the swing point from a couple of days ago. That level is, drum roll Johnny, there we go. That is 81.30. You'd like to see that get taken out with volume. That could set up an A to B equals CD to the downside. And this would be the price projection that you would be looking for. See if we get this in before the bell out here, before I get taken out. 77.57 would be that number. And that's a possibility today because you did see a test and rejection of Stevie's red line. Steve Rhodes with TFNN.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up about 21 points. S&P is up 3. Gold is back at $8. So let's go take a look at gold and try to figure out what it's doing, what message it's providing to you and I as 1:18 in the afternoon. So when we do that, we're just going to stop in here and take a look at our TAS market profiles. And what we're going to notice is that today, this morning, a brand new profile formed inside of the gold contract. Now, this profile, this daily time frame chart, that is panel number 1, 2, 3. Well, it's the second one from the right. It's neither bullish nor bearish. It's just equally weighted because the center of the box is pretty much truly in the center of that entire box. The bottom, which is under pressure, is 1269.60. We're trading at 1269.50. What happens if you break below that box? Well, in one sense, the box is bearish from the standpoint that the top of the new box is below the top of the prior one, and the bottom of the new box is below the bottom of the prior one. So failure there wouldn't be anything abnormal. It would really be telling you that you could anticipate gold to get up to 1287, but from there is where the sellers ought to be positioned. 1284.10 happens to be the center of the box, or the point of control on the weekly chart. The real key level, in my opinion, to be watching is going to be 1261.70. And if they were closed below that this week, then that's going to go ahead and set off a move, or should set up a move down towards or to the bottom of the July 10th weekly swing point. And that is in the range of about 1211 out there. So that's the message of gold when we take a look at their market profiles. If I take a look at its daily chart out here, yesterday was and today were small, well, not small, they were bearish message signals to you and I. For those of you that like to use Stevie's red line, we know how important this acts as a level of support or resistance. We can see yesterday was a level of resistance. Price got up into it, tagged it, moved lower. That means we have a falling price oscillator below zero. That is the bottom panel out here. That is not bullish. So you're watching to see if gold can get above Stevie's red line. It's at about 1278. We'll just call it 1278 even Steven right now. The message here on this daily chart is bearish, with the daily chart falling price oscillator below zero. So I'm going to anticipate that what we're going to see is we're going to see gold go back down and test that weekly level in the 1261.70 area. That would be the first thing. What would stop that, or could stop that, would be the yen. So if we take a look at the yen, I've got the GDX. We'll come back to the GDX in a minute. Let me go ahead and put the yen. No, let me do this here. Let me do this instead. Let's do the hocus pocus, dominocus out here, and really take a look at yen futures the way they should be taken a look at. And that is by understanding this large consolidation area. Now, we saw the bullish signal from Friday. You and I took a look at that yesterday, right at the bottom of the consolidation, right where other bullish engulfing candles have formed. We then saw follow through to the upside. That was gold bumping its head into Stevie's red line out there, whereas the yen was able to clear it. No problema. Now, there's a brand new profile that has formed out there as well on the daily basis, but let's not pay attention to that. What we're really paying attention to is the mere fact that we got the bullish signal, the bottom of the consolidation. You got above Stevie's red line, and right now as we speak, we're pretty much trading on it or slightly below that level. So it would not be bullish to see the yen futures continue to weaken, move lower out here, and it certainly would not be bullish if yen futures take out this consolidation. If they do, the message to you and I is that that weekly level in the 1261 area in gold is not going to hold. And if it doesn't hold, you can anticipate that you will see the mining equities move lower as well. So you're really at that point. No action needs to be taken, depending on which side of the trade you are on. But you're really at that point where there's going to be an important message that's going to be delivered to us. Thus far, the message is support is held. Weekly, bottom of the box. Daily, bottom of the consolidation inside of the yen. So you've got everything that you want. If we take a look at what's going on inside the GDX as well, because of the high degree of directional correlation that it has to gold, what we're going to see is yesterday wasn't quite a move up to the oscillator and change line, Stevie's red line, but it was pretty darn close. So what we do know, though, is that price continues to trade below that. And when we take a look at the bottom portion of our screen, we also know that we have a falling price oscillator below zero. So that is not good. If we take a look at the A to B equals CD patterns, let's do that by going to this chart here. Let's go ahead and put in GDX. So you'll see the weekly, that's in the center. You'll see the monthly, that's on the very right-hand side. And those blue lines are the market profiles. For those of you that are listening in, the weekly, bottom of its box, is priced at 22.33. So come Friday, you don't want to see it close below that. If you do, it's not really the positive sign that you would be looking for. And the weekly chart would say, well, Steve-O, that says price can come all the way back to 16.28 out here. Just looking at profiles. If we look at the daily chart, we're going to see that there's a swing point for the A to B equals CD. That was formed out here on October 2nd. And that had volume behind that move of 47 million shares. And 47 million shares was taken out with 51 million shares. So in A to B equals CD land, what the GDX has already confirmed for you, if you think, and I always see people post things that will say, well, the GDX, when you know, you can find what you're looking for, I suppose, but when you see the GDX moving higher in gold, there's not, hey, the GDX is a leading indicator. Those same folks typically won't turn it around when the GDX is making a move to the downside, that's the leading indicator as far as gold. I don't think you need to do any of those. You just trade these things on their own merits and whatever patterns exist inside the charts. What we know about inside the daily for the GDX is that you've passed a B point with wide price spread, accelerated volume. If you don't have the art of timing a trade, go get the art of timing a trade, because it's very clear what the message is. That is that the GDX wants to go down to at least 21.22 out there. That would be your 1-to-1. In A to B equals CD world, we would say that's probably not where it wants to stop. So 2047, your 1-to-1.272, is the more likely target area. But you've got to pay attention. If that's going to happen, the yen's going to bust through its, or should bust through its consolidation level. If that's going to happen, gold is going to go ahead and move below that weekly profile level. So those are the elements for you to be watching while I'm gone during the week, because then you will know what the patterns were ahead of time and maybe what kind of action to take for those of you that are, for example, long nuggets or GD or you long the GDX and So hopefully that's being of some assistance to each of you. Now there's let me just see if there's any requests that are in here, because I do want to get to any and all requests before I leave out here. So very quickly, what do we have? We've got John. John says, have fun. John, I will. I came down with a nasty sore throat or cold or something yesterday. So it's not the way I want to start, but I'm throwing everything, including the kitchen sink at it. So that I'll be all set to go come tomorrow afternoon, as I'm sitting in the tasting room at La Jolla, sipping on some nice Cabernets. John wants to take a look at Walmart long term, and he's looking at the $100 price target. So let's go look for that. Get back from this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
John in Sarasota, we're taking a look at Walmart, and John's question is, will this long-term get to the $100 level? So because he's looking at the long-term question, let's look at a long-term chart and see, in fact, what Walmart is doing. So the very first thing that you and I should notice is, where's it trading into right now? You've done 190, not you, but Walmart has done 194 million shares so far for this month. So how are we trading as we're trading into whatever we're trading into? Happens to be the actual all-time swing point high from January 2015. That had volume of 158 million shares. So, John, here's what we know. Price is going to close or should close inside that swing point and do it with volume. Typically, when you close inside a swing point to the upside or downside with volume, it says you're going to go test the high. So that says that the high of 90.97 should get tested. The actual high so far this month has been 89.11. So the first number that you could anticipate where Walmart is going to head to is that 90.97 level. Now, what you and I can see here on this chart on a monthly basis is that all-time swing point high candle session also happens to be a shooting star. So that provides to you and I that so-called line of polarity. So if price tests and rejects that level, it shouldn't come as a surprise, because you know that's where, in essence, the snipers are hanging out. The sellers are where they were back in 2015. If price, and what price has done thus far, John, if we take a look at the previous swing point on a monthly basis, it's August of 2016. There was volume there of 212 million. That was passed with 182, 143, 247. So it was passed with volume out there. And we can see the current A to B equals CD pattern that is underway. Would take us to the 1-to-1 was 84.17, the 1-to-1 0.272, 89.31. Now the actual high so far, 89.11. You got to like that. That's the 1-to-1 0.272. Does that mean the A to B equals CD move is over? Heavens to Betsy, no. Because we want to put this in context with, hey, what are you doing at the swing point? So at least that high is going to be taken out. If that high is taken out, that, and this was, by the way, if you take a look at that A to B equals CD, I'll go ahead and get rid of the pattern here. This was a bearish reversal signal right here. There's your three-river evening star pattern. Once you get above a bearish reversal candle, that should become support. That is really what happened inside of Walmart. And old what it was resistance, old resistance should become new support. That's really what I should have said out here. So if, in fact, you're going to be able to get to 100, you need to see on a monthly basis, that would be next month, most likely December, price to close above 90.97. And if it does that, then what you're looking at, and if it can do it with more than 158 million shares, then you're looking at a long-term A to B equals CD. The conservative A to B equals CD levels that I would look at would be from August of 2011 is your A point, your B point, that shooting star, January 2015, your retracement or your C point down on November. And that gives you 98.96. Now, John, maybe that's the work that you've done to just simply round it up to 100. But I would also suggest that it could go above that 100 or that 98.96, could easily get to 110. But one step at a time. The good news is it's going to close inside a monthly swing point with volume. And that says that that top is going to be tested. So thanks for your kind wishes, and best of luck if you are in that trade. And hopefully that assists you with where it is. The charts are telling us that price wants to head to. Okay, no other questions at the moment. So let's go look at something else. What is that something else? I know what it can be. Let's go take a look and see what's going on inside the advanced decline oscillator readings for the three indices you and I track. With it, the New York Stock Exchange still below zero, NASDAQ Composite still below zero, and the Dow Jones still below zero. Believe it or not, and I don't believe it, but I believe it, but I don't think I'll get you to believe it, sellers are still the ones in control of those three indices. Tell somebody that inside of the NASDAQ Composite. Inside of the S&P 500 keeps hovering right around that 50-day exponential moving average. Thus far, it's acted as resistance. If it acts as support by closing above 1046, you know the outcome, and that is that the S&P 500 would pull back. Now, this Bollinger Band that I'm looking at continues to get narrower and narrower, but in resistance for the spot volatility index could be in the 1129 area. So if there are those of you that are playing those what are they, UVXY, SVXY, all the XYs out there, just be careful. We may just really be in kind of a narrow trading range, especially as we take a look at those products and as we're taking a look at the messages coming from the advanced decline oscillator readings out here. If we take a look at the messages coming from our market breadth as well, here is the daily time frame chart. You can see earlier in the day, that yesterday I should say, we had a little bit of a kiss and tell out here as you got down to basically 34% of the issues trading above the box and 33% below. Nonetheless, it remained bullish. This has had a bullish crossover ever since August 28th out there. So there's nothing bearish as of 1:36 in the afternoon with regard to the market breadth inside of the S&P 500. If you did get that, well, that could turn into be a one-day wonder, or it could turn into be something longer. If we take a look at the NASDAQ 100, this is still bullish, and taking a look at the daily time frames with 44 issues trading above the box and 29 below the box. And that's using the boxes of those TAS market profiles that you and I like to be able to look at. Tarpon 2 is asking a question about the TLT. Are you long? Tarpon 2, I'm assuming you'd be long the TLT and you would be short via, what is it, TBT out there? No reason for me to assume anything, but just asking the question so I can better assist you with regard to what's going on, that Marvin Gaye tune out there, long. Okay, so in order to stay long the TBT, there's a couple things that you're going to want to take a look at. So first, TLT. You know what I meant. I know what I meant too. For some reason, I had one thing in my mind and another thing on the lips, so to speak. Now, here are the ETFs for the TLT out here. You get the daily on the left-hand side, the weekly. You've got the monthly chart out here. But those really, Tarpon 2, are not necessarily where you're going to get your best signals from. Your best signals are going to come from the following. First, let me see if I can go find this chart. I had it before, so no reason why I can't find it again. Here we go. So I'm putting up the 10-minute charts here for gold, T-bond futures, and the Japanese yen, just to see. So there has been a bit of a divergence with regard to the yen and the 30-year Treasury, because if we take a look at this, so it's really kind of interesting. If we take a look at yen, you can see that this has been in a steady decline. That's why we're seeing the move lower inside of gold. But with regard to the U.S. Treasuries out here, no decline. Just really kind of this little sideways-ish move, right? So, you know, is the correlation done here, done and over? I don't know. But here is what I would instead, for you, be watching for. I'd always keep an eye on this. But when we get back from the break, what we would do is go take a look at the daily contract for the 30-year Treasury. So let's go look at those profiles. Let's look at this chart. And this chart says to be long via TLT. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we were taking a look at the 30-year Treasury before I went into that breakout here. So here's what you're going to be focused on. This is for Tarpon 2, who happens to be long the TLT out here. So you have a nice set of patterns that formed out here a couple of days ago. For those of you that are aficionados of the Chapman wave, what Stevie likes to look at is wave number 7. We call that the chart singing in the key of G for Stevie Wonder. The last top that was made out here in the 30-year Treasury happened to be one of those patterns. How does it work? I don't know. Hats off to Saratoga Bob, who was really the first one to kind of notice this. So it's slightly different than the Chapman wave, and probably that 7th wave isn't exactly how Basil teaches it, but it is one that we go ahead and we pay attention to. So you can see that the low that has occurred thus far in the 30-year Treasury 2 days ago, 2 trading sessions ago, and you'll see that that was also a 7th wave move, letter G. Had a nice little bearish engulfing candle that formed that day. Get a brand new market profile that came out, suggesting the move up in the 153-ish area out here. Price yesterday closed above Stevie's red line. That is at least short-term bullish. Price oscillator well below zero, which means, Tarpon, that you do not want to see it get below Stevie's red line. Just call it 151 and some change out there, depending on how it is that you're trading it. All of this can take place when that ETF, the TLT, is not really trading. So this is going to be, these are going to be levels that you're going to want to watch. I'd say you also want to watch, at least with one eye, the yen, just to get a feel for what it is doing, or yen futures out there. That's probably going to be easier for you to take a look at. The what you're going to look for on the 240-minute chart, I'm going to put the 120-minute up here first so you can look at it. You can see that we've had this nice move up ever since it formed that bottom back on Friday. What took place out here that you like to see with regard to the long signal, and this is going to be shorter term, what you're going to be looking for, when you get that price oscillator bottom panel, when it starts to get up to the zero line, which was basically at 8 o'clock in the morning, that was on October 30th, that was yesterday, what you are then waiting for is the confirmation test. Tells us that price and Stevie's red line are going to go ahead and test each other. So if we go take a look at it, you can see on the very next trading session, that is what happened, just as that price oscillator was getting to the zero line. Why does that happen? Because it is rocket science. It's just the way that it works. And the test here from the Jet Propulsion Laboratory, that's called Stevie's charts out here, was a bullish test. Price came back, tested the red line, continued to move higher. Now, if price on the 120-minute time frame falls below Stevie's red line, it might just mean retracement. That's why you simply go back to the daily time frame. You know what the levels are that you're paying attention to. You're still above even the 2-hour charts with regard to their TAS profile. So there's no real big deal out here. But what you're also noticing is on a 4-hour basis, the same pattern is going to unfold, I'm going to presume, over the course of the next 24-ish type hours. Because what you can see here on a 240-minute time frame, right now what the price oscillator is dealing with is the zero line. So we're going to see price pull back to test the red line, or the red line to move higher, price to pull back, something like that, some combination of that. And you would be looking for that same bullish test that we just looked at on the 2-hour time frame chart out here, because there's nothing more bullish than a rising price oscillator, bottom panel, above zero. That's what you have on the 2-hour chart. That's what you're looking for to occur on the 4-hour time frame chart, the 240-minute. And then finally for you, for all of you out there, here are your profiles from the 60-minute, the 240, which we just took a look at, the daily time frame, and then the and the weekly as well. 153 and change is where this thing is headed to. Is it going to get above that, Tarpon 2? I don't know. I would say that if the yen futures continue to trade higher, which is not what we're seeing here today, then you have a real good chance that, yes, that 30-year Treasury is going to continue to move higher as well. So I hope that that helps you out with regard to your trade. If I put the TLT, well, I put that up there for you. So, but if I did this here, just as one last piece of information, and we'll switch it from monthly, we'll switch it over to daily. The levels to be watching here, approximately 123 and change out there. You know, that's where Stevie's red line is. If you get below that, it's probably not a good scene. You could make another run all the way down for the bottom of that Friday session out there. So I hope that that helps you out. Let me take a quick peek out here to see if there's any other requests. If you guys in the den or gals in the den have any requests, just go ahead and fire them up, please, and I'll be happy to go ahead and take a look at those. I don't see any other questions out here, so let's go surf around. You know, we talked about some of the mining equities out here, the GDX chart, I should really say. So we were looking at the entire basket. Let's go look at a couple of them. Let's go look at Rand Gold, just choosing it, just for no reason other than it was just sitting there on my chart. What's the message here? Been just in this little consolidation sideways, so nothing big. Let's take a look at Franco Nevada, FNV, see if there's anything that pops up on this chart. This too really just trading to in a sideways range out here. So whereas you and I looked at, we saw confirmed A to B equals CD pattern inside of the GDX, we're certainly not seeing it in Franco Nevada. I think it's one of the top 5 holdings out there. Gold Corp also one, so it's not there. It must be coming from Barrick Gold, maybe ABX. Let's go take a look at it. Is this confirmed A to B? Yeah. So it's coming from Barrick Gold, primarily, which is the heaviest weighting inside of the GDX, but this thing blew apart. I don't know what was behind that, if that was an earnings release on October 26th, but 28 million shares to the downside. So just out of curiosity, where is it that Barrick Gold is headed to? So it's trading into a swing point, did last week, that had 131 million shares, and it moved into it with 79. So that's not too bad out here. This would say this is headed back into the 1395-ish area, 1381-ish type area. That is the likely outcome for Barrick Gold. I have a request to go take a look at soybeans. The January 2018 contract. So let's go see if we can pull that up on our chart for you. Give me a moment here to try to locate that. There we go. Let me just change the symbol. So we got F18. That's how eSignal now does it for their years. You got to put in the actual, you got to put in the right symbol. That was corn. That was not it. Give me a moment here. Let's do this thing correctly. Give me a second here. F18. Okay, so let's go fly the F18s out here and tell me what is it that you are looking at, Cam? while I just kind of cruise through these market profiles out here. Say, really a steady decline, long against 981. Okay. I can see that let me look at this while we go to the break. I'll come back and Cam give you my expert opinion on soybeans as it relates to the January contract. Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So as we take a look at soybeans out here, we're looking at the January contract. Here's what I'm paying attention to, Cam. And I know you're long against the 981 level. And we can see that this is on a 4-hour basis, been in a steady decline, coming back into that sign of strength, which took place at 10 o'clock in the morning on October 12th, so between 10 and noon out there. And if price closes below 982, you should expect that price is going to get down, or should get down, to the 969 level. Come all the way back to the breakout, which is the bottom of that candle session. That's what the 240-minute chart is suggesting to me. The daily chart also says that, hey, we're still in this little bit of a downtrend. We're making lower highs. We certainly have been making higher lows 2. So we've got a little wedgie pattern that's going on here. And if we just simply take a look at our trend lines out here, let's go see if this thing has broken its trend. It's very close to it, right? So it's come all the way back, Cam, to what has ideally been a good level from a trend standpoint. But well, I was looking at the 4-hour chart as far as when that breakout occurred, and that's what that chart was telling me. Here's what the daily chart is also telling me as I take a look at it. You're right now into this trend. If you see it close below that 240-minute and you see it close below this green diagonal line, price is likely going to get in the 973-ish range out here. That's the bottom of its current daily profile. So that's what it looks like to me. Price right now is up against support. If support fails, you'll see it on the 4-hour chart. You'll see it on that daily time frame chart, and then you will know where price is headed back to. We've got one last question here before we sail off to the West Coast, and that is from Tim. He's looking at MTU out here, and MTU is Mitsubishi, and the problem with the Mitsubishi chart is a lot of this here is based on the yen currency as well. And one of the things that I did was I took a look at the Mitsubishi chart here. You can see that it's been in a nice little uptrend since September 6th. At the same time where the yen has been weakening. So there does seem to be some correlation there as well. I know you were looking for an entry point. You got to take that currency into play as well, but I'd say 673 might be your point. Folks, stay tuned for David White. I'll see you next Thursday. Be well, be safe, and have fun. Trick or treat.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.